The real estate landscape in 2025 is evolving, and one segment that's gaining attention is non-traditional housing, specifically mobile home parks and modular builds. With the demand for affordable housing continuing to rise, more investors are turning their attention to these types of properties. But how do you get financing for mobile home parks or modular builds in today's market? What are lenders willing to finance, and what terms can you expect? In this video, we're going to explore the opportunities in financing for mobile home parks and modular builds. We'll break down what lenders are looking for, how to structure deals, and what terms you can expect. We'll also discuss the growing interest in affordable housing and why these non-traditional housing models are gaining traction with investors and lenders alike. Lenders are showing increasing interest in financing mobile home parks and modular builds for a few key reasons. First, both of these housing models are considered part of the broader category of affordable housing, which is in high demand as the cost of traditional single-family homes continues to rise. In 2025, with the market facing ongoing affordability challenges, more investors are looking at these non-traditional housing options as a solution to the housing shortage. When it comes to mobile home parks, lenders are particularly interested in parks that have a strong cash flow and well-maintained infrastructure. Parks with high occupancy rates, stable tenants and minimal deferred maintenance are typically viewed more favorably by lenders. Additionally, mobile home parks located in growing or stable markets with a demand for affordable housing are also prime candidates for financing. For modular builds, lenders are looking for projects that meet local building codes and zoning laws. While modular homes have often been seen as an alternative to traditional construction, the reality is that modern modular homes are highly customizable and can be just as valuable as site-built homes. Lenders are interested in modular homes because they offer a quicker build time, lower construction costs, and high potential for return on investment. The demand for affordable housing has never been higher. As property prices continue to increase, the gap between affordable rental options and available supply is, honestly, just growing. This has led to a renewed focus on mobile home parks and modular builds as a way to fill that gap. Investors are realizing that these affordable housing models offer solid returns and less risk compared to traditional real estate. Unlike luxury housing, affordable housing is often recession-proof. People will always need an affordable place to live, making mobile home parks and modular builds attractive options for investors seeking long-term stable cash flow. Moreover, with rising construction costs and a lack of available land for new developments, mobile home parks and modular homes present an attractive alternative. The ability to buy land, set up a park, or build modular homes quickly at a lower cost makes these options even more appealing to investors looking for scalable, high-return projects. When it comes to financing for mobile home parks and modular builds, the loan terms and funding structures will vary depending on the specific property and lender. However, there are some general trends to be aware of. For mobile home parks, you can typically expect loan terms with interest rates between 6 and 9%, and loan-to-value ratios ranging from 65 to 80%. The exact terms will depend on factors such as the location of the park, the condition of the property, and the financial stability of the borrower. For parks with high occupancy rates, stable cash flow, and well-maintained infrastructure, you may be able to secure more favorable terms. When it comes to modular builds, lenders are usually a bit more cautious, and in real world, the terms can really vary based on the size and scope of your project. Interest rates generally fall somewhere between 7 and 10%, and loan-to-value ratios can range from 60 to 75%, depending on how complex your project is. Construction loans are pretty common for modular builds, and these loans usually have short-term durations, with a strong focus on the project's completion timeline and the future value of the home once it's all finished. When looking to secure financing for a mobile home park or modular build, it's essential to show the numbers, and show them clearly. Lenders will want to see detailed financial projections, including operating income from the park or rental income from the modular homes. Providing a clear exit strategy, such as refinancing or selling the property after construction is completed, is also crucial. For mobile home parks, lenders will want to know the park's occupancy rate, tenant history, and maintenance records. Highlighting the potential for growth in the area and the demand for affordable housing will help make your case stronger. Similarly, for modular builds, you should emphasize the cost efficiency, quick build time, and high-quality construction of modular homes, along with how you plan to sell or rent them once completed. Mobile home parks and modular builds are gaining traction as more investors recognize their potential for steady returns in an affordable housing market. In 2025, financing for these properties is available, but it requires a clear, well-structured deal. Whether you're looking to invest in an existing mobile home park or develop modular homes, understanding the financing options, loan terms, and what lenders are looking for will give you the edge in securing capital for your next project. At Phoenix Funded, we specialize in providing financing solutions for mobile home parks, modular builds, and other non-traditional housing deals. If you have a deal in mind, visit phoenixfunded.com and let's get you the funding you need to succeed. Whether it's a DSCR loan, hard money loan, or another funding solution, we've got the flexibility to help you close fast and grow your portfolio.